All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. My apologies for not doing the video on Friday, just for the fact that I had to get the sandbags from my backyard and get it ready for the trash people. So the trash people come, I think, around like nine something in the morning. So I had to get those ready to load up and toss as well and take them to the dump. So again, that's hurricane stuff. If that's the worst that I have to go through, I'm very lucky because prayers to the people of the western side of Florida and also our friends in Puerto Rico that have gone through the hurricane as well. Another one, a separate one. So it's just been a little crazy out there. Obviously, where I'm at, it's not that bad. There's some flooding near the beach near me, which is called Satellite Beach and Cocoa Beach, which is about a good 20 minutes, 30 minutes away. But again, they had some flooding. So again, it's going to be a recovery thing. Takes a while in terms of hurricanes in Florida. That's just the name of the game. But here I am, ready to rock. Let's go ahead and do it. Uh, this morning, Dow Futures are green. Hey, how nice is that? Up 317 points. Nasdaq up 0.65. The only reason that's not up as much as the Dow is Tesla. Tesla delivered their all right, I don't care. It's new stuff from Bloomberg. Tesla reported their deliveries over the weekend. I can read you that here a second. 343,000 versus 360,000 cars estimated versus the 254,000 quarter over quarter. Q3 production 365,000 versus 258,000 quarter over quarter. They beat on Model S and X deliveries 18,700 vehicles versus 16,200, and Model 3 and Y 325,000 versus 238,000. Here is the report. If you want to take a look at it here on on Twitter, please do at GAR Capital. Love to have you as a follower. Posted some really good stuff over the weekend. Manchester United, notwithstanding, they got wrecked yesterday. Goodness gracious, that was terrible to watch. Halftime, it was over. Haaland is an amazing player. We got the wrong player from Dortmund. We got Sancho instead of Haaland. We should have got Haaland. S&P up 1% this morning, 36.38. We'll go over the S&P futures together and go over the chart that we posted on Instagram regarding Fibonacci levels on the weekly chart and the 200 moving average. Russell 2000 up 1.43%. That's outperforming the majors. Crude oil is up 4.67% this morning or overnight due to OPEC talking about production cuts. That helps gasoline as well. Just a little bit driving around last night. Gases are below $3 a gallon for regular where we are in Central Florida. So that's good. I mean, it doesn't mean anything in the big picture. I mean, it'd be great if it stays here, but at the end of the day, that's gas price for you, up and down. It's all based on right here, crude oil and gasoline futures. Natural gas up 0.17%. Gold is up 0.17%. Thank you to the dollar for being down, relatively flat, excuse me, 112.28, up 0.15%. Not going too crazy. Silver futures up 4% this morning, 1979 an ounce. Euro dollar down 38 pips, 97.63. Dollar yen is up about 11 pips, 144.91. The pound dollar switches around and flips higher due to the tax cuts that were proposed by the British government was reversed. So the tax cuts are not going to happen. Let's go and take a look at the 15-minute chart. And we had a nice little bump there. Right here is where we had it this morning. And then we kind of just settled in. Bitcoin futures 19,180 currently down 1.26%. Ethereum exactly at 1,300. 10-year Treasury yields, let's go over it together. That's trading at 33.694%. The VIX 31.35, down 0.85% this morning on the VIX. Let's go ahead and take a look at the hourly together. You can see kind of holding on support above 30. Let's see if we can break down below 30. The worst seasonal month is over of September, at least that. Let's go over the bond market. We'll do an intraday chart here on Bloomberg. And you could see here just an intraday, we're now slicing through support here just the past 3 days, 4.1176. This is going to be your barometer for the stock market. If short-term borrowing returns are higher than what you can get with stocks, that's a problem. So again, at least we're going to get some kind of bond buying with the rates going down here. In terms of support, let's go ahead and take a look at a monthly chart. We'll throw on a couple lines on the screen. Let's go ahead and annotate this. We'll go ahead and create just a straight line here. And you can see your support here is right around, oh, we'll call it 4.07%. And then your next line of support is right around that 4 level. So again, we want to get below 4. That's what we're looking for. But again, let's see if we break below 4.07, 4.08% this morning. We're now trading at 4.11% on a 2-year basis, but maybe we get that rollover and maybe get a couple of gaps to fill here. There's a gap here at 3.87. Gaps are important. Let's take a look at a 10-year. Again, slicing through that support as well. You can see we're testing that support from September 30th where we bounced. We're trading at 3.6924. We'll go to a monthly chart and see any support levels that we can find. We got one right off the rip. Let's see here. We'll go and throw in a support line right around here. And that's around, what's that trading range here? 3.68%. That's our new support. Let's see if we get there. You could give a little bit of room here to around 3.66. But after that, your next level down, again, if we are expecting at least some kind of run up in equities, the 10-year can break below 3.6. That'd be very nice. But again, it's all dependent on the bond market right now. That's what I look at every single day. All right, let's go and talk some bottoms. I know everyone's interested in the bottoms. We talked about that in 2020. We caught the bottom relatively close, not exactly. I mean, not that it's not that easy. So SPX is the spot index. Again, that this is not open currently. So we have S&P futures. So we did a couple of things together here. We put it on Instagram and Twitter. Let's go ahead and take a look at our drawdowns right now. So let's go ahead and see if I can kind of spread this out a little bit. So here we are on the weekly chart. You could see we have a 25% drawdown. We are now at the 200-day. You could see it marked there, 200-day yellow line, or 200 moving average on a weekly basis. So these are weekly charts. Again, you could see how many years it's gone by. Down 25.62% as of Friday's close. That is the 200-day moving average. Do we bounce above that? Well, so far we are. If we're looking at what are the next roadmap, what's the next thing we're looking for? If we get some more little more down drawdown, excuse me. 29.59%, we'll call it 30%. That'll get us down to the pre-pandemic highs of 33.88. Let's see, 33.88. I think I have it at 3,400. So pretty close. But that's where we are. If we get a 30% drawdown, we are now at 25.61. With today's open, we'll probably be up a little higher than that. So again, that's pretty much a really big target, 34.88, 3,400. That even Bank of America is saying that's where you really want to start buying at that point. In order to look at the Fibonacci's, the next level, let's take a look at this drawdown, 35.56%. This would match the exact COVID drawdown that we had, the pandemic drawdown. That would get us to the 50-day moving average. That gets us to 30.90, 30.93 or so. I think at that point, personally, I would probably raise as much cash as I can to buy because that's pretty much last call. And again, if stocks break down below that and we start going down to the COVID lows of 21.97, wealth will be destructed at that point. Just an insane drop. If we did that, we did those numbers and we were trying to see, okay, how much of a drawdown would it be to get down to the COVID lows? You need a drop of 55%. That's a 55% drawdown. We haven't had a 55% drawdown, not even in 2008. 2008 didn't have that kind of drawdown. You could see the drawdown of 2008. We'll take a look at it here. Here's your peak. This is the dot-com. This is the financial crisis. That's 48 point. Actually, that is 49.22. That's the drop that we had from 2008. Now, granted, that was the end of the world at that point. Do we get there? I highly, I think that's very unlikely. I would say less than a 1% chance. I think the number we're looking for here, guys, if you're looking for that stop or that level that you say, I think this is the last call for it, I'd have to go with right here, 33.92, 3,400. Granted, I'm still buying SpyG every week, but again, 34.92, I think that's the bear's last stand. That's just a recheck of the pre-pandemic highs that undoes all of this, and then we could see where we go from there. But we remember our seasonality. November, October, December tend to be strong months, especially during midterm season. So again, stronger relative to other months. So again, something to think about. Let me go ahead and take away this. I'll move this over. Okay, so let's take a look at S&P futures, at least on an intraday basis. And you could see, I talked about this the other day with Spy on Twitter. 362.17 has still been kind of that magnet of support. All we're doing is checking back to it. I think 362.17 will get there, but other than that, I don't expect a ton of a rise here. But again, starting off on the right foot, maybe fear subsides from September. We have earnings coming up this month, and we also have midterm elections in November. Let's go and take a look at Forex Factory. This morning we have ISM manufacturing PMI. We have a lot of Fed speakers. We had like 26 last week. I think this week we have 13 or something like that. JOLTS job openings on Tuesday. OPEC meetings on Wednesday. We already know there's talking about production cuts. ISM manufacturing on Wednesday at 10 in the morning. And then we have ADP private payroll. That's 8:15 on Wednesday. Thursday, we have more FOMC speakers. And then Friday's the big one. We have non-farm payroll report. That is Friday at 8:30 in the morning. Just a heads up. Again, we're looking at that every single week. The labor market is still very strong. We had a very strong unemployment report last week. That's unemployment claims. So again, the labor market is still very, very strong. S&P futures getting back to that 36.39 level that we talked about on Twitter. You could see that was the previous June low. Looks like we're recapturing that low. We broke a little bit below it. Remember, support is kind of like a mattress. You can sink in a little bit and still bounce. Again, I still think the risk, the best payoff is to the upside because we're so beaten down in terms of RSI, in terms of every oversold you could think of. We're there on every really long time frame. How about 228 reading on SPY? Let's take a look at S&P futures, a 32 reading, oversold. If we go to the weekly, oversold. Again, it doesn't mean you can't say oversold, but again, at these levels, this is where you're starting to look at opportunities. Not as of yet, but again, you kind of don't want to try to catch the bottom in a sense, just exactly the T. You kind of want to see when things are changing, at least on a macro sense, interest rates are coming down. So again, it's imperative to watch the bond market. I know the bond market is extremely boring, but again, it is extremely important to watch the 2-year and the 10-year and the dollar moving forward. Let's go ahead and take a look at the dollar index together. And again, dollar has been doing this a while where you get this big spike and returns back down and a big spike and returns back down. We've had that all this year. So again, I expect with this pop here, we'll probably get to around 110, sub 110, and then we could bounce again. So let's not get too excited. If we start getting below this 50-day moving average on the daily, which is right around 108.67, that'd give me a little more solace than getting to 110. 108.67 would be amazing. I think stocks would go a lot higher, excuse me, with that. But again, we'd have to wait that out as we go along. Volatility index on the hourly, we'll take a look here and you could see just pretty much stuck in a range here of around 33 to 30 with a pop to 34 last Wednesday, came back in. So I mean, not much to it here in terms of the volatility index. You're kind of holding that 100-day so far. We have split it before. Below 30, I think would give me a lot more confidence moving forward to trade, at least a little more calls. But again, nothing new here. I mean, I'm still looking for calls because we're so oversold. And again, I'm not against shorting the market. I did try to short the market a couple weeks ago. That was at 3,900 on that little blip that we had. If you want to take a look at it, it was right here, that 3,900. I played that break, and then we had a nice little sword drop on absolutely nothing. So again, frustration station, table for one for me. That's where I've been. So again, in terms of the market here, you're really just waiting and seeing here. Again, if we get a little bit of a pop, it could be sold. We're right at 36.39. That's a key support level. That's the June lows. If we start breaking above 3,700, maybe we can get a little more excited. But for right now, it's just nice to see that we're out from the abyss of Friday, because Friday kind of felt like a capitulation day all around. But wait and see for October to give us more information. Let's go and take a look at Apple. John is asking about Apple. Do we see more downside this week? Well, the hourly, we are bouncing, but let's go to the daily and see if we can get a little bit of a roadmap. Big fall on Apple, as we see. In terms of gaps, there is none to the downside on the daily, so at least that's some good news. On the weekly, really your support is really 130. That's what you're looking for. Right at 130, that's the level. Again, if you're looking for puts, let's say we reverse this all this down here, I would start taking a look at the 130 puts. That's the stock I would want to short to that target or buy puts. So again, if the market S&P futures do rise, Qs rise, Apple's going to rise with it regardless of any kind of downgrades. There's such a big, it's the largest part of SPY and Qs. So again, if you start getting a rollover in stocks, let's say we get back down below 3,600, then I would start taking a look at those Apple 130s and try to be as nimble as you can as you go forward. Are you buying stocks heavily yet? Not as of yet. No, no, no. I still doing my S&P futures. There's one stock that I am looking at to buy this morning, or at least kind of keeping an eye, is CVX. Again, we have OPEC on Wednesday, so I'm going to wait a little bit. Let's see if OPEC does production cuts. There's an upside gap to 155. Here at 148 or so isn't a bad level for Chevron, but we have OPEC looming. Chevron right now paying a decent yield. So again, oil markets are, I don't think they're going to go break below 75 at this point. Now we're at a point where OPEC is saying, okay, that's the level we're stopping. We're going to cut production targets. So 75, that seemed to be that last drop. We haven't been that low since November. So let's just call it for what it is. Unless OPEC does not cut, but it seems that V75 is major support for the oil exporters. Earnings season coming up. Where do you see SPX after earnings? The 400 calls for November look good. Let's go and take a look at SPX. We did that roadmap together. I think you meant SPY. I think you meant 400. 400 calls. Wow. Okay. First thing when it comes to earnings, the dollar. The dollar is super important. How many multinational companies are going to get hurt with the dollar? We just saw that from Nike. So again, keep your expectations low. Apple's did not forecast for this fourth quarter or third quarter for them in their fiscal year. You could see that it is important to look at the totality of the market and the macroeconomic environment. If there's a time to pre-announce for companies, now is the time. Give everyone the bad news now ahead of earnings, and then that the earnings give information. But I don't expect a lot of big things with earnings just because of the dollar itself. The dollar being strong is hurting these multinational companies that take payments in foreign currency. They have to bring that here to the States. And again, you get that current foreign currency slippage. So that's going to hurt on their EPS, earnings per share. Could that be baked in? Absolutely, depend on the analyst, but we'll go to earnings as we go. But again, the bar being so low, seasonality speaking, could we get a little bit of a bounce? Sure. Or could earnings be that death knell that gets us all the way down to possibly 3,400? That is a remains to be seen approach. We have to see how the movie ends. Personally, I think earnings come out not great. But I think that gets us to the point where the Fed may say, okay, maybe we're done here. Again, no real news from them pivoting away from raising rates. But again, we have to see day by day with all those speakers. They keep repeating the same thing over and over. Still waiting on buying for me, yes. Google is a stock that I do want to buy. Let's go ahead and take a look at the weekly. I have an alert at 92.18, now trading at 97.45. 92.18 being that 200 moving average on the weekly. That's my target. What is my end of year level for the S&P 500? Let's do it. We'll do ES. A lot easier. Let's go ahead and go to the weekly. We broke that down. If I had to put an actual level where we actually bounce up, it would be, I would say 40. Let's do 4,200. That'd be my target for S&P year end. 4,200. That's right there, the 200 day on the daily. So 4,200 is my target. Man, I had a target of 5,100 at the beginning of the year. So being wrong is nothing new. But 4,200 is the target for the year. Nike got brutalized. What's a good level to load the boat? COVID lows is the question. Let's see. We'll see on Nike. And I remember this with Target. And that's where I got into Target, was on that flash fall. So we have 1 day down. I like something called the 3-day rule. Wait, after a big volatile move, wait 3 days, see where you are with the stock. If the stock continues to fall, you'll probably get a better price. I don't think it gets to 60, but again, around 80, it just gets really, really interesting. Let me take a look at their valuation right now. I am a shareholder. PE ratio around 22 right now, not terrible, a little expensive. 1.47% yield. They do have a lot of inventory. Starting to see more inventory in their outlets. I went the other day, and but again, I still think Nike is a great company to own. The only issue with them is they're very linked with China and emerging markets. That's where they get their production. So again, we need to see if emerging markets do bounce with a softer dollar over time. So this is a dollar play. If you think the dollar is going to go ahead and fall, Nike is a play you want to do and buy the stock personally. I don't want to do it as of yet. We're now in day two. We're now in day two post earnings. Let's see where we are on Tuesday. And Dixie has just had inverted hammer on the weekly. Do you think this marks a temporary top? I think that the dollar does come back down. I really do. And then I think I see what you see here, the inverted hammer. Again, I think we'll probably get to around 110 or so on the dollar. Again, we've seen these kind of shifts up and then pull back, shifts up, pull back, shifts up, pull back, and it's been kind of steadily doing that. The only way that changes and breaks that pattern, in my opinion, is if we get to 108.71. That's the 50-day on the daily. I hope we get there. I think at best we'll probably get to 110 maybe the next couple of weeks if that's the case. But 108.67 would be great. Let's keep an eye on yields as we go forward. All right, guys, that was a mouthful. Have a great rest of your morning. I will catch you guys tomorrow for the morning note, and we'll see you then. Let's make it a great trading day. Dow Futures up 355, last check, and 3641 for the S&P, with the Nasdaq up 0.78%. Starting to move a little higher. That's a good sign. I know it's been tough out there, but we're still here every single day talking about it, answering your questions. I love this. As long as I'm breathing, I'm here. Have a great rest of your day, guys. We'll see you tomorrow.